Hi everyone, and welcome back to our weekly roundup of the cryptocurrency market on behalf of Apex Signals. The last time we spoke, this time last week, markets were in a bit of a free fall after the news had broken that Korean prosecutors had raided the offices of Upbit, the largest cryptocurrency exchange in South Korea. Luckily, nothing major has come out of that so far. There's been no output at the moment. That doesn't mean that there won't be at some point. The exchange itself has very strongly refuted the allegations of or the suspected fraud that prompted the raid. The reasoning was that there had been manipulation, or one of the main reasons given was suspected manipulation of the capital being held by the exchange in reality in comparison to what it stated as the capital it held. Also that exchanges were going on without coins being involved and so on. The company has said it's done its own internal audit, which has turned up nothing and everything is completely clean. How much faith we can have in an internal audit, I don't know, but as of now, Upbit appears to be in the clear and nothing major has resulted from that. If we have a look at the chart in front of us, that's the overall market capitalization over the last 7 days. Now we start at the bottom of that drop over on the left of the chart. And over the weekend last weekend, markets actually recovered after fears that around that raid calmed down. However, this week has seen a bit of a downward slide. So you can see here on the right, we're currently at 371 billion overall market capitalization. This time last week we were at around 390 billion. We had a Tuesday high of 410 billion, and we've since been moving down again. So it seems as though we had a little solid run of 4 weeks of gains, and that period appears to have fizzled out now. If we have a look at the 1 year chart for overall market cap of the cryptocurrency markets, if you put a little bit of attention to the right here, we can see that peak at the end of last year, which was just before we went into January when it hit the top. And since then, we've had two major slides. Now, what you can see is that if we have a look at the January peak, then we have a little slide there. Then we have a gain, which was over a couple of weeks in February. Followed by another longer, more gentle slide, and then we have another period of returns or upward gains on the right, which is the 4 weeks that we've just been through. Now that's again given way into a downward movement. The potential negative is we're now, over the course of this year, we've seen a series of lower highs and lower lows, which tends to indicate a general bear trend in the market. Now there had been hopes before things fizzled out. Things had started to fizzle out. The upward momentum had started to lose a little bit of strength even before that Upbit situation took place. However, we've now seen that downward slide continue, and having not been able to break above the Bitcoin 10,000 level on the wider market, break above the previous high set at the end of February, beginning of March, things are not necessarily boding well at the moment from a technical point of view. However, it has to be said that technical analysis in Bitcoin markets is has to be taken with a pinch of salt, because we don't really have the liquidity in the markets or the history for it to be as reliable or give as much insight it does for more traditional financial markets. So don't take that as a given. Even in traditional financial markets, technical analysis is not a given, otherwise trading would be easy. However, it's even more the case within cryptocurrency markets. But it is a general downward trend with lower highs and lower lows. So we'll see what happens over the next week or several weeks, and hopefully the downward movement now won't go on for too long, and we can start to push up again. And that could be crucial in terms of what we can expect to see over the next few months and towards the end of the year. If we flip over now to Bitcoin, where are we? Bitcoin 7 days. Yeah, so Bitcoin dropped to 8,270. We see here on the left of the chart that was the low after the upbit raid. And the Tuesday high was $8,885, and we're now down to around 8,160, heading in towards later on Friday afternoon Central European time. And we did actually briefly drop below 8,000 earlier today. You can see here on the right of the chart, which is not fantastic, but we are moving up again, so hopefully we can get some upward trajectory into the weekend. It's been a relatively quiet week overall in the markets. We've had a couple of the major event was really the Bitcoin Cash hard fork, which took place on the 15th, and that's one of the only major events of note. If it hadn't been for that upbit drama last weekend, then there wouldn't be a huge amount to report this week, and all that can really be said is that we're losing a little bit of trading volume from the market, and the momentum from that 4 weeks of climbing has dropped off, and we're now into a bit of a downward slide. So we're talking about Bitcoin Cash. Let's have a quick look at the chart here. Of course, on the 15th, that hard fork happened. We've spoken about it a couple of times. That involved increasing the block size for Bitcoin Cash up to 32 megabytes, which will dramatically increase transaction times and reduce transaction costs. Now, the argument behind that is that Bitcoin itself is not currently viable as a real currency, in the sense of being used to pay for a wider range of goods and services as traditional fiat currency is, because of the relatively long transaction confirmation times, and also it's also relatively expensive to confirm transactions at the moment because of the inefficiencies in the mining process, because of the scalability issues that Bitcoin has encountered. And really, Bitcoin's being used as a store of value at the moment in a similar way gold would be seen in traditional financial markets. Of course, it still very much dominates the cryptocurrency market in terms of overall market share, although that is dropping and has been dropping quite significantly over the course of this year. However, Bitcoin Cash, the whole reason that the initial hard fork took place last year was to create a better blockchain protocol that would be more scalable and would allow the crypto to be used as cash. And Bitcoin Cash had been gaining quite significantly in the last few weeks in the run up to this hard fork on the 15th. We're up to 1,500 last Sunday, and we are now down to about 1,202 since the hard fork happened. Actually, within 24 hours, Bitcoin Cash had lost 12%. And one of the main reasons is that a lot of people were buying Bitcoin Cash in the run up to the hard fork. That's possibly because normally when the hard fork happens, the holders of the original blockchain coins also get the new coins equivalent from after the hard fork, so they essentially get free cryptocurrency. With this hard fork, that wasn't the case. The existing coins were simply moved onto the new blockchain, or reflected on the new blockchain, so there was no additional Bitcoin Cash hard fork new coins handed out. And the downward movement since then is probably more of an indictment of the strong upward movement that had been happening in the build up to that hard fork. So it has happened now. We've been on a bit of a downward trend since there. A lot of people, however, are very optimistic about Bitcoin Cash's prospects in the medium to longer term, because of the efficiencies that increased block size will bring. One of those is Roger Ver, the Bitcoin.com CEO, sometimes referred to as Bitcoin Jesus, because of his early involvement investing in the cryptocurrency market. He spotted the potential very early on and has made a lot of money out of that as a result. Now, he's a particular advocate of Bitcoin Cash and believes that it sticks much more closely to the original Satoshi Nakamoto white paper, and he's very bullish on it, and thinks that the slide that we're seeing now will turn around and we'll see a bright future for Bitcoin Cash. One of the other cryptos that we've been speaking about quite a lot recently is EOS. Now, EOS suffered some spectacular losses last week. It dropped a lot, and even before the upbit situation happened, it was moving into a downward spiral, and we saw a bit of recovery early this week. We've since seen a dip towards the end of this week. EOS have now announced that the mainframe platform will be released on June the 2nd. Now, the EOS tokens which are currently available are Ethereum based tokens, and they're part of the ICO. The EOS platform will essentially be a rival to Ethereum, ironically enough, but the makers are positioning it or marketing it as a next generation smart contract and dApp platform that is much more scalable than Ethereum. A lot of analysts believe that this will prove to be the case as well, and there's a lot of optimism around EOS. In late April, however, the coins are up at $22.47. We're now at $12.76. So we've had quite a drop off since the peak then. However, there is still quite high trading volume, which bodes well for EOS longer term. I've mentioned several times I'm quite a fan of EOS and think it has good prospects. Okay, that's pretty much all we have time for this week. Hopefully you can snap out of that downward trend over the next week. It looks to me at the moment as if we might be in store for another week of sliding, but I might be wrong. Hopefully I will be, and we'll pick up again next week and see where we are. Bye for now, and enjoy your trading over the weekend.